Good evening, ladies and gentlemen. Happy Wednesday to you all. So today we're going to be going over the commodities, oil, silver, gold, and natural gas. Fatal had some personal things he had to take care of today, so you're stuck with me today. So without further ado, let's get into the video. So we're going to be covering oil first. Oil, we've talked about this channel before, where I basically said until you break this trend, you really don't know which way oil is going to go. And guess what? We're still in this trend. We're maybe making our way to the upside. I'm a little more bullish skewed on oil than I was bearish skewed before, where we were kind of coming down to this trend line here for more downside testing. However, we came down to this trend line, bounced off of it, and are trying to make prices go higher. So if you're looking to be bullish on oil, to me, it's basically once you break above this $82.73 region that you can go truly bullish. You make dollar cost average your position in. You are in a level that where if you were dollar cost averaging here on the way up, if you came back off rejecting off of $77.74, then I could see that downside potential not really hurting as much. However, you could see the $77 region be broken and then pushing up higher past $78 cost averaging on the way up for the retest of 82.50 roughly. Now let's take a look at what Luxalgo is telling us. So MACD is crossing almost bullish. You have the divergence squeezing together. They haven't crossed yet, so don't get too excited, guys. We have to see that cross to confirm. RSI is starting to make its way back to bullish. Oscillation really hasn't bottomed out. That's why it gives me a little pause on oil that this MACD curling towards one another could be a fake out, but if we look at the weekly, it really gives you a clear and present picture of what's happening. You basically are pinching together on the MACD, RSI is heading towards bullish, oscillation has a divergence. That gives a very, very strong case for oil to push up higher. Now, will it? You really have to see once you start exploring these upper prices, especially starting to get back into the 80s. Now, if you fail to do that, then we have to look at where the downside is. Downside testing to me is going to come down to $68. That's where I'd be looking at my first bounce, and anywhere in that region from $68 all the way down to $52. There is a zone sitting down here at $52, but I think it'd be significantly unlikely that we get down here, especially with the United States Reserve getting bought back up around the $72 to $62 region that was just announced probably last week. I want to say that they were going to be buying oil at that price range. So definitely a floor for oil, or a synthetic floor for oil, because all that inventory that was pushed down into the market now has to be rebought and replenished. Next, we're gonna go into silver. So looking at silver, it's pretty bearish overall. You're below all the moving averages here. You broke below your key support, bounced off of where I thought we were going to bounce in this region here of $20.40. Now, if you're able to reclaim the 200 daily moving average, then I'd be looking to possibly get bullish on silver, but you're then going to be in the kangaroo. So again, to be bullish on silver, in my opinion, you have to get above the moving averages. So it means you have to get above $21.46. If we fail to get above that, you're probably going to be exploring your levels down all the way to $19 to possibly $18.50, especially with the strength of the dollar and yields and treasuries. You're definitely going to have money flowing out of the precious metals, possibly going into those, because those are zero risk assets that pay a guaranteed return, whereas silver and gold don't do that. However, in the long term, you're definitely heading in the right direction. So let's take a look at silver from Luxalgo. Well, what's funny is I did say we had a rising wedge, drew out the pattern, and look where we bounced. Exactly where I predicted we would in this reversal zone. MACD is crossing possibly bullish on the divergence, and RSI is extremely oversold, bouncing back. So this could be an interesting point to pick up silver. You could play a little risk here and try to get in. It'd be an interesting swing point up. Just have to have proper risk management. Now, if we don't hold this region, break below the $20.50 level, then I'd be price exploring down into the 18.5 level to 19 flat for silver. If we look at the weekly for silver, you're pretty diverged bearish on the weekly. RSI is going lower, so there's long-term momentum to the downside, but there's also short-term momentum that could reverse this, could start curling this back up and make forward progress on it. So we really just have to see what the charts do and wait for a trend confirmation to then trade it to the upside or trade it to the downside. And segueing into gold, perfect. Gold is holding pretty strong. I thought we were going to get a bounce at the 50 daily moving average, we didn't get that. So now we came down. We haven't actually retested the 50 weekly. We failed to bounce within it with a very small margin. So we have to see what happens. If silver comes down and goes lower, I definitely think gold will start cracking key levels, and it would definitely be to more downside potential. However, let's take a look what's algo is telling us on the gold front. We are in a price target zone. MACD is diverged from one another, where it could be going to the bullish side, but because you are on the sell-off, you do have the possibility for it to come up, hook back down, and go lower. We really have to see where we go from here. RSI was oversold. However, things can stay oversold significantly before it has a reversal, so we have to be very cautious with this. Oscillations are basically just bottoming out completely, going super to the bearish side. And then if we look at the weekly time frame, similar to how we had silver, you basically have long-term divergence on the MACD. RSI can go definitely lower, oscillation the same. So we really have to see what happens in the short term for gold to determine its future price. What I'd be looking for is that gold stops going down. Same with silver. We need to start forming this bottoming pattern, and then I'd be looking for long-term price action. Next, we're going to go to natural gas. So if you're like me, you're in the natural gas club, and we've been basically catching a hot knife until recently. Natural gas had a nice push up, probably taking out some shorts like we were saying was going to happen after they took us out on the bullish side. I'm still holding my natural gas position, guys, just full disclosure. So where do I see natural gas going? I definitely think you could get back up to the, I'm going to use UNG because that's what people actually trade. I could see that $10 to $13 exploration before this MACD kind of curves back down towards the bearish side. Because you had this divergence, you need to push up higher, get into this bullish territory to really clear it. That's where I'm saying we could start exploring this region of $10 to $11 before we had a pullback, and then possibly going up into the 13s, kind of taking out a lot of this price action here that we need to fill. However, we could easily bounce here, have a dead cat bounce, and go lower. I'm fully aware of that, and that's why I'm selling options to counteract any downside potential that I have. You did have a significant increase in volume, so we could possibly be exhausting up here before we go lower or have a consolidation period. So really, we have to see what it's doing. If we look at the weekly, the weekly is trying to pinch together on the MACD. However, we need a couple, probably more weeks before we see that close together or significant price movement up. RSI is trying to get out of that super oversold territory to the upside. So definitely something to be on the lookout for. If you're in natural gas like I am, it's looking better than it was before, but we have to still stay cautious and manage risk properly. So if you guys like this type of content, hit the like button down below. It really helps the YouTube algorithm. Hit subscribe if you want to stay tuned for more series like this, or if you have a ticker request that want us to do fundamental or technical analysis on, throw it down in the comments section below. And with that, I hope you have a wonderful Wednesday, and I'll see you tomorrow morning in the Thursday video.